Good morning, good afternoon, and good evening, viewers, wherever you are. Welcome to the first joint seminar by the South China Morning Post and the World Economic Forum. My name is Eugene Tang. I am the business editor of South China Morning Post, coming to you live here in Hong Kong. Today, we have with us 5 speakers coming to us from all over the world across diverse multiple time zones. To talk about a very important topic, which is the digitalization of trade. The very fact that we're dispersed all over the world and we are not able to congregate together in the same one place is because of this coronavirus pandemic that is affecting all of us and forcing us to be locked down and working from home or working from offices in secluded places. Now, this trend has accelerated and changed the way we behave, the way we consume, and the way we conduct commerce across the world. On the more personal level, we are all familiar with the increasing tendency to shop, to pay for things online, which is a part of digital trade. But on the more macro side, there is that exchange of goods across borders, shipment of things from point A to point B, which is increasingly taking place on the digital side. This includes the provision of professional services, the clearance of customs, legal, auditing, accounting, and all kinds of additional services that make this possible. So to help us sort of bring our mind around this increasing trend, whether or not this is a new normal, we have with us 5 people. We will talk about this, several points. The objective of this discussion is hopefully to be able to come up with some actionable takeaways on the conditions needed to make this digital trade arrive at a more equitable, open, and efficient platform for global commerce. First of all, a bit of a definition. I mentioned about the individual level of digital trade, which is what all of us are comfortable with, which is familiar with, which is shopping online and paying for goods and services online. But on the more macro side, we have the shipment of goods across borders, which is digital trade. So to kick off this morning's discussion, we go to Ms. Ankiti Bose, who is the co-founder and chief executive officer of Zilingo, based in Singapore. A bit of also housekeeping. Ankiti has to leave us halfway into the discussion, so we will try and front load a lot of the conversations around the first 30 minutes around Ankiti and the rest of the guests. Ankiti, welcome to the show. Your clientele covers Indonesia and India, 2 of the largest markets in Asia, excluding China. What has COVID-19 done to your business? Can you share with us?
Good morning, everyone. When COVID-19 hit, it was very obvious that the first thing that was going to happen was that there was going to be a dip in consumption, which naturally happened, especially across various non-essential categories. And then eventually we saw that e-commerce started trending upwards, especially on the B2C side, even though offline retail kept on struggling for various obvious reasons. People couldn't go out and so on and so forth. Now, the merchants that were supposed to be benefiting from the e-commerce tailwinds, supposed to be benefiting from the fact that now people had no choice but to shop online, had a strange predicament because while majority of the e-commerce innovation and capital has been spent in digitizing the part of the trade and the supply chain that takes the product from the merchant to the end consumer, not a lot had, at least in Asia outside of China, been done to digitize the sourcing of products that the merchants can actually get to them before they actually place it and list it on various e-commerce platforms and it passes through. So what we saw was this mad rush in which merchants were forced to digitize themselves, and it's like Eugene, you said, it's not just simply about listing and selling products, but really understanding how they can move from sourcing from old school buying houses, agents, and distributors, from doing physical sampling to doing contactless sampling, from doing, from actually visiting warehouses to doing all the processing virtually and keeping stock across their different channels in virtual warehouses, figuring out how to do invoicing, inventory management, tax compliance, and automation around it, and most importantly, the merchants who were able to digitize fast or were already in a position where they could digitize quickly and were exposed to various digital channels, both on sourcing, procurement, invoicing, as well as sell through. They were actually in an advantageous position compared to those businesses that were relatively, less digitized or still a little bit more old school. And what that did is it created this huge dichotomy. There was the bottom part of the businesses and SMEs involved in digital commerce who were not that adept and perhaps were not able to take advantage of the tailwinds that emerged from especially the e-commerce tailwinds that emerged out of COVID. But I would say the top 25-30% that was able to do that is actually in a position to be able to really drive growth for themselves over the next few quarters. So it's really interesting how sort of the predisposition to having your inventory and trade set up for digital commerce, having access to capital more in a more free flowing way, having access to data in terms of how product mixes were shifting, made a disproportionate impact in the lives of businesses in Asia as COVID hit. And now 6 months down the line, you can see a huge difference in the way the future of these businesses are panning out.
Thank you. Thank you. Josh Kalmer, welcome to the webinar. You are coming to us from Washington, D.C. Josh is the head of public policy at Zoom. Welcome to the webinar. First of all, congratulations. You have you recently reported blockbuster earnings, and we are doing this webinar via your product. So tell us about the growth. What has COVID done to your business?
Yeah, well, thanks, Eugene. And let me first say thanks to the South China Morning Post and World Economic Forum. It's really a pleasure to be here, and good morning to everyone. I assume it's morning for most of you. I think it's cliche in a way now to say that the last few months have been transformational for people. They have been really for just about everyone on the planet. But I think uniquely so for this company. We went from being a company that served almost exclusively large enterprises back in February and March to virtually overnight having just a wide range of consumer use cases, as people know, people doing yoga classes, remote education, telemedicine, faith communities meeting, and of course, a lot of business uses. We went from 10 million daily active participants to over 300 million just in a matter of weeks. And so the experience of the pandemic not only strained our system, and we were fortunately able to scale up in a way that allowed us to meet that demand. I think it reflected the importance of what I define to be digital trade, not just to this company, but to all of the people that we serve. I mean, digital trade is a term that gets used in a lot of different ways. I use it in just about the broadest possible way to refer not just to the act of using the internet to sell goods and services, but to even the movement of data that happens sort of around those transactions that may not itself be part of a transaction. And so Zoom's ability to use a globally distributed architecture around the world, we now have 19 data centers to make sure that meetings succeeded, that people were able to connect with one another, depended and depends on data being able to move, on people being able to access the internet, on data centers working seamlessly across borders, and so it's been a quite an eye-opening experience for us, it's really transformed the company, but we feel good about how things have gone, and it has reinforced the importance of the topic we're discussing today, which is how to ensure that the policy environment remains and ideally becomes even more sensitive to the fact that for all of us to experience higher living standards, for kids to be able to go to school, for people to be able to get medical care, and business to be able to be done, data's got to move. Digital trade has got to succeed, and we've got to have the rules and the norms in place to support that.
Thank you, Josh. I would like to say a warm welcome to Jack Zhang as well, who is the co-founder and CEO of AirWallex. AirWallex is a fintech startup based simultaneously here in Hong Kong as well as Melbourne. Welcome to the webinar, Jack.
Thanks, Eugene.
Now, digital adoption has been essential in dealing with the aftermath of the pandemic, and financial services is particularly essential to this. Now, you are a fintech startup. Your business is revolves around financial services. Do you have data that shows the number of new users to your services in the last few months?
Of course, Eugene. I mean, as you know, AirWallex help businesses, especially digital businesses, to operating their business globally and growing that business globally. And we see some significant changes in the last 6 months. So when the pandemic happened in sort of late January or early February, we feel the music sort of stopped a bit for a few weeks, and everyone is sort of panicking, trying to figure out what's going to happen. But we see, we had a hypothesis at the time that e-commerce should be come out of this even stronger by looking at the data, from SaaS over a decade ago. Then the actual data prove our hypothesis is actually correct. So we see, from across our customer base, where close to 70% of the user is e-commerce, we see our Q2 number have grown over 53% compared to Q1 number. So it's come back pretty strong, especially around the April and May timeline. We see some of our customers in the e-commerce sector growing over 200% just in that single month. And we also see the digital and technology revenue have boosted it over 40% in Q2 over Q1 as well. So that including, I guess, digital technology businesses similar to Zoom. At the same time, we see logistic growing over close to 70%. That kind of correlated to the e-commerce sector. While we see these industries have growing significantly in the last 6 months, we think the speed of e-commerce accelerated at unseen speed. Probably what happened in a decade happened within a couple of months. But at the same time, some of our customers have significantly impacted it, like travel. Used to have 10% of our revenue. We see travel revenue have dropped over 85% in Q2 compared to Q1. At the same time, we see close to 40% drop in international student tuition fee payment, which means international students either do a gap year or defer their study, so that we see a significant disruption in that industry. There's very interesting data we kind of seeing even sort of in Q3 and now it's close to the end of Q3. E-commerce just continued to growing stronger and stronger, and haven't been slowed down at all. So this is some of the very interesting data we have seen, Eugene.
Right. Thank you, Jack. I also would like to extend a very warm welcome to Mr. Nelson Chao, the Chief Fintech Officer at the Hong Kong Monetary Authority. Now, the HKMA, as the de facto central bank in Hong Kong, has really been one of the key innovators and leaders in digital financial services transformation. Even before the COVID-19, the HKMA has taken the lead in introducing policies like the sandbox for fintech companies to experiment their services in a ring-fence environment. And also the HKMA has introduced 8 virtual banking licenses in Hong Kong even before the COVID-19 began. So Mr. Chao, welcome to the webinar. Can you tell us whether the COVID-19 has sidetracked or accelerated your digital transformation and fintech efforts?
Thank you, Eugene. Definitely, it's accelerating the adoption of fintech solutions. You can tell from all sorts of data. I think Jack shared some very important figures, and I totally agree with Josh. Transformation sounds like cliche, but it's real. I can share some figures related to digital payment, but because today's topic is about digital trade, and no trade can go without payment. And in terms of the transaction volume that we can see from the faster payment side, in July this year, the average daily transactions is 4 times the number of July 2019. And in terms of the registration, it reaches already 5.7 million registration of the, for the use of this faster payment system. For a city of populations of 7 million, this is significant. It compares very, very nicely with a year ago. I think we only have like 3.2 million registration. So you can see from all sorts of figures, you can tell the digital adoption is accelerating, and you can also see from the reports from the largest banks on the media. They also see it's very broad-based. It's not just retail customers are going more digital. They also see their business users are more willingly to adopt digital solutions.
Thank you, Nelson. Mr. Fan, welcome to the webinar. You're coming to us from San Francisco. You are the head of digital trade at the World Economic Forum. From a policy standpoint, what are some of the ways that we can enhance digital trade?
Oh, thank you, Eugene. One word: urgency. I think it's pretty clear from even from the past 10-15 minutes, we have heard that there has, from the private side and private sector side, and then from the technology side, everything ramped up during this pandemic. But what about the policies, the regulatory framework, which have always been lagging behind, but this pandemic just widened that gap. From, for example, bills of lading, which is a physical trade document that in many places, countries will still require a physical copy of that, to the data flows restrictions, to some of the, for example, the payment licensing issues that, for example, Jack would be well familiar with. So I think there's urgency for the public sector and private sector for in a public-private partnership to really ramp up. 3 really quick things we can do. One, to create forward-looking trade agreements and policies. Everything from the joint statement on e-commerce at the WTO to some of the more innovative digital economy agreements. For example, DIPA, which stands for Digital Economy Partnership Agreement among Chile, Singapore, and New Zealand. And recently, Singapore also signed a digital trade agreement with Australia just last month. So there are a lot of things we can do on that front, and to make all the rules interoperable. It will be difficult to create a golden rule that everyone would agree to, but the key is that even if we have different rules, how do we make them work together? And last thing is trust. The reason why we have all the intermediaries in trading system is because the lack of trust. Technology and internet have helped that, but also create some issues, data security, privacy, for example. And we need to find ways to increase the trust for digital trade really to flourish in the next decades to come. Thank you.
Thank you. So we've heard from all 5 panelists. They're all coming from different experiences. 3 people are involved in sort of on a more individual level of digital trade. We've got a policy head from WEF, and we've got a monetary authority. Now there's a lot to unpack, and we'll try and unpack a lot of the points that are being discussed. The first question that I have, and this probably is open to everybody, is whether or not this is going to become the new normal. As the coronavirus pandemic ebbs and web and rises, some countries are beginning to emerge from the lockdown. Hong Kong, for example, is probably at the end of this 3rd wave, and work is beginning to return to normal. But for the people who have adopted a digital habit of consumption or even digital trade, have they gone past the tipping point? Has they gone past the point of no return? Will behavior return to pre-COVID-19 levels? Let's go to Ankiti and ask whether from your clientele in e-commerce, has e-commerce adoption gone past the tipping point?
Definitely, Eugene. I think, I was talking earlier about forced digitization. Now, what has happened is that once you adopt a more efficient way of doing something, and you discover that definitely over the long run, if not immediately, it has a huge economic incentive for your business as well. It's very unlikely for anybody across the value chain to go back to a more analog behavior. So, in the adoption of technology before COVID, we would think of challenges like how will they get used to new digital behavior? How would merchants use invoices? How would there be transparency, when products need to be shipped, etc. But like we just heard from all the other panelists, more transparency, more technology, more digitization is making things faster, making things more efficient. And as people have discovered that new efficiency, the new normal, there is almost no way that anybody will go back to how things were even a year ago, and perhaps the digitization that would have happened over the next 10 years as technology players drove more and more adoption is probably going to happen in the next 1 or 2 or 3 years, and in some ways things have changed forever, and even though several businesses may still feel more comfortable doing things offline or doing things analog, there will definitely be a new normal that has already emerged, which essentially creates comfort and trust around digital transactions. Now, in that, obviously, e-commerce companies, old school trading companies, trust platforms, several monetary authorities have a large role to play to ensure that this behavior and this adoption is permanent, positive, and very, very efficient in the long run. But I think on our platform, we have seen not just adoption being driven up, but also retention being driven up, which is that even as lockdowns are easing, and lockdowns have eased in several of our countries, people are sticking and perhaps even spending a much larger share of their wallet on digital platforms, on platforms like ours.
All right. Thank you. Josh, what about you? What about Zoom? Your business model is built around people meeting in cyberspace. As you say, from 10 million to 300 million daily active users. But people miss being in physical contact. I have got problem hearing you guys, so I can't detect the body language. I can't, get the sense of the closeness of physical interaction. What do you think? Do you think life will return to post-COVID? Will people still want to have this physical interaction in meetings?
Well, I think I miss it too. I really miss it too, Eugene. And I think Ankiti put it really well. It will be a new normal. It won't be the old normal. It won't be forever changed. I mean, I've had a kind of an interesting personal evolution in the last 4 or 5 months that in a way may help answer the question. I actually used to be a trade negotiator. I negotiated digital trade provisions in the earlier part of my career, and both in the public sector and in the private sector, just like I imagine everyone on the panel, who spend a lot of time on airplanes, a lot of time in other markets. And I have always believed, just as an article of faith, that to really make progress on, whether it's in business or whether it's in trade policy, you have to sit across from the person. You have to be with them physically, and you have to establish that one-to-one, face-to-face connection. I still believe that, but I think the circumstances in which that's true, and which I will believe that is true in the future, have changed somewhat. So, for example, I've found just doing meetings with my new colleagues at Zoom, I've been in this role a little over 3 months. I haven't met anybody in person, but I've already established a deep connection to people. I've worked with foreign government officials very successfully. At the same time, it's just not, in some ways, there is a piece of it that you just can't get to. And then there's just the lovely mundane things about daily life in an office. And so, even we at Zoom recognize that. And I think we're going to be there for people however they want to use us. But I think we recognize that the future is going to be a little bit more nuanced maybe than some of the representations out there have it be. There will be return to in-person interactions. Our kids will hopefully go back to school at some point for their sakes, as well as for ours. And I think at Zoom, we're preparing for that world. It will be substantially increased dependence on our technologies and internet platforms generally, and doing things digitally. But people need each other, and they need each other in the same physical environment, and that won't change.
Right. Thank you, Josh. I'd like to ask Jack. Now, Jack, your Air Wallets is really all about financial services, and financial services that is digitalized is, I guess, in a lot of ways more efficient. You have data that shows that the majority of your users in the past few months are new users, but how many % of them have shown the preference that they want to stick with digital? Do you have such data?
Yeah, that's a very good question, Eugene. I absolutely agree with Josh and Akili on that comments. And I truly believe that we actually at the beginning of a new era where digital economy is going to be the center of this new economy structure. That from the survey we have sent out to our user base, we have seen 75% of the respondents plan to continue to use the digital channel post-COVID. That's a pretty significant number. And we see some of the B2B decision maker believe digital-enabled sales interaction will be 2x more important than before the COVID. And this is a number we have never seen in the past. And personally, like I have been travel 20 to 30 countries as a B2B decision maker myself, and have to fly to somewhere in Europe to meet a big customer's CEO because it was seen as not polite if I or not take it serious enough if I not physically visit them, for example, in Germany. But now I got a perfect excuse not to fly 30 plus hours around and come back. And I can perfectly having a meeting with them over the Zoom. And I think that's actually a lot easier for us to do business than spend a whole week in Europe just to meeting one or two customers. I think as a B2B decision maker, I urge everyone to get ready for this new era, and we are only just started.
Right. Thank you, Jack. So Ankiti, Josh, and Jack have sort of told us that this situation is going to be with us. The adoption of digital is here to stay. Which brings up the next question. It creates this digital gap in the world, around the world. Obviously, different countries, different markets around the world have different levels of digital infrastructure. There's also the ecosystem and the preconditions that make digital trade or e-commerce or online shopping or e-payment or all these good stuff possible. For example, credit scores in the existence of credit scores in developing countries. So Ankiti, I know you have to drop off soon, so I want to grab you quickly before you drop off. Since you operate in Indonesia and India, two of the largest developing countries, population centers in the world, what is the level of credit scores in your key markets? And what do you think is needed to help overcome or close this digital gap?
I think that's a very interesting question. The challenge that, as we see a great degree of adoption in digital trade, one of the challenges is going to be that a lot of small and medium businesses that have suddenly digitized and suddenly a part of the digital economy, they don't have long enough, well-documented credit history in several of these countries, simply because the credit scoring and sort of the risk infrastructure has not existed for long enough. And a lot of these transactions, in a lot of these economies, especially in countries like Indonesia, etc., have, historically not been factored in towards creating something in the form of a credit score, which would ease the access of capital for small merchants. Now, in the situation that capital is not easily available especially for medium-sized businesses and small-sized businesses, then they would not be able to take advantage of all of the tailwinds of this sort of trade digitization that's happening in the wake of COVID. And if it is not solved, then it will, like you said, widen the digital and the financial gap between the SMEs and the businesses that are in a position to take advantage of everything that's going on right now. Now, in such a situation, I think, I'm sure there are several factors, but two key levers that come to mind one is obviously wide-scale adoption of technology and data that is generated from these technology platforms be used by governments and financial institutions to quickly and more easily start scoring businesses and providing capital to them. And I think, obviously the companies that are doing this in the technology space would not be able to do it with a lot of help and intervention from monetary authorities, regulators, as well as financial institutions. So I think everybody realizes the need for that. We have seen even in our business when we talk to our merchants and so on, that banks, financial institutions, fintech companies, everybody understands the urgency of solving the need for having the right way to gauge the capital requirements to keep this momentum going. But I think it's going to take a lot of effort now on the behalf of technology companies, governments, and financial institutions to work together to make sure that we can all create a much better outcome at the end of this.
Thank you, Ankiti. I would like to also switch now to Mr. Nelson Chao. We're talking about Hong Kong. When we talk about Hong Kong, this is a relatively small population, mostly urban, which is well served in terms of telecommunications infrastructure, IT infrastructure. But there's also a bit of a digital gap in Hong Kong, especially with micro SMEs that generate more than half of the employment in the city. So I want to ask, what is the HKMA's overall policy to close the digital gap and promote digital adoption, particularly for micro SMEs in the city?
Yeah, you raise a good point, and SMEs are important drivers, not just in Hong Kong. I think it's also the same in globally. 50%, almost 50% of the employment is contributed by the SME, and also in GDP wise, I think they also contribute a lot. In terms of the COVID impact, we definitely see that for the big guys, they may not see this gap because they are very digital. Most of the MNCs, they're using sophisticated ERP systems. Or in their entire value chain, it's more digital than the SME players. But for us, I think first of all, the policy is to help them to survive through this challenge. So we have this introduced this 100% loan guarantee scheme. So a lot of these micro or SME enterprise can benefit from that. But that's not, we cannot stop from there, right? We have to move on and see whether a lot of the fundamental issues can be resolved. As it was mentioned earlier on, what are the problems and why they are seemingly underserved by the banks. One important aspect is they may not have the credit history in a form that is easily accessible, and so that's why in the normal traditional way of bank credit assessment, they may not be easily getting any credits from banks. So what we are trying to do is we have try to fix this issue on multiple fronts. One is on the trade finance side. We are working with the BIS Innovation Hub, and also together with a lot of international players like ADB, IIF, WEF, all that, to try to solve this puzzle. I think this is the important things, how we can leverage alternate data, not the traditional financial statements of a company, whether we can build up this data and allow the banks to use those data, leveraging latest technologies like artificial intelligence. So we are also working on another project together with a local research institute called ASTRI. They're working on how alternate data can help these micro SMEs to get credits from banks.
All right. I also like to turn to Mr. Fan. From the WEF standpoint, because you deal with global organizations and forums all the time, what are some of the best practices in place for closing the digital gap in emerging economies?
Yeah. Eugene, thanks so much for shining a light on this extremely important issue, because digital trade can only grow if everyone in the system feels it's fair, whether at the individual level or at a country level. Otherwise, individuals will resist it, they'll vote against, agreements or policies, or at the country level, they may take some, protectionist measures, because they feel like, it's not fair. So I think it's extremely important to close that gap, and not just from, between the developed and developing countries, even within the so-called developed countries, there are gaps, the digital divide, between the city and rural, between one ethnic group to another. So it's an extremely important issue. So 3 quick things. One is digital FDI, because we know there's many countries have FDI policy, foreign direct investment, but those policies usually were made in past decades to attract, say, big factory, real estate, investments, a greenfield. Whereas, we need a new set of policies for attracting and to build the digital infrastructure. So digital FDI, I think that's something developing countries particularly can lean into, and the forum has a program on that. To increased connectivity, which is the basics for a lot of the discussions we're discussing. And then education to the public, but also to the policy makers about digital trade and technologies and what are some issues, so that good policies can be made both domestically and internationally. Thank you.
Right. Thank you, Mr. Fan. So you brought up a very important point about policies. Now, we know that in the world right now, there are a lot of different initiatives to put in place different digital trade policies. We have, for example, the EWTP that was pushed a couple of years ago. We have the Data Free Flow with Trust, or the DFFT initiative pushed by Japan, also signed announced at the WEF last year, and also affirmed by the G20 in Osaka last year. And then the Digital Economy Partnership Agreement, DEPA, that was mentioned earlier, and also various ideas under the auspices of the CPTPP and the USMCA. So, which brings to mind a question: Is it possible for a single golden rule to be applicable in global digital trade, the way physical trade exists? And I want to put Josh on the hot seat, leveraging on your previous experience as a U.S. trade representative, and now working for a Chinese company based out of Washington. From the policy standpoint, we have initiatives that are pushing a singular protocol or guideline, if you will, on digital trade. We also have concerns about data privacy. We also have push for open flow of data. How do you reconcile all these together? Is it possible for a single rule to be available?
So thanks, Eugene. I'll get to that question. I should clarify, Zoom is actually a US company. We're founded in California. We're incorporated in Delaware, and we're listed on the NASDAQ. We do have operations in China, but we're deeply committed to the United States. This is home. We have more than half of our employees in the United States. And so I just wanted to make sure that was clear for the audience. Before answering the question, and I will answer it categorically, I think it is important to understand that all of the different initiatives are, in fact, just that, different. There are some that are political initiatives that nevertheless are important, like Japan's Data Free Flow with Trust initiative. There are regional agreements like the CPTPP and the USMCA. And then there is currently one single multilateral initiative, the e-commerce negotiations in the World Trade Organization. To me, the answer is yes. It is absolutely possible for a single set of rules to govern the world, and I think that should be the aspiration. It's extraordinarily difficult to get there precisely because of what you mentioned about differing values around things like privacy, different approaches to data security, different economic development imperatives that sometimes cause governments to feel like we need to require that facilities and computing machinery and data be localized. All things that sort of tug at the foundations of a lot of trade rules. But those kinds of domestic sensitivities are not new. They've existed forever, generations ago, and still today they exist in agriculture, they exist in industrial goods, they exist in issues around the supply of services across borders. And so there's nothing, in my view, qualitatively different about the push and pull among different countries trying to figure out what's the right policy recipe reflected in a given set of rules that is going to allow our country to grow, to find and create economic opportunities for our people, to protect their data, to protect national security. And the efforts at the WTO have been, they certainly were promising before the pandemic. They've been slowed down a little bit. But I truly believe that we can have success at the multilateral level. All trade agreements, even where countries notionally sign on to the same rules, have slight variances in them to accommodate the needs for flexibility of certain countries, and I would envisage that would be a part of it. But there is absolutely space for a single outcome internationally that can provide terrific rules for the whole world.
Thank you. Mr. Fan, do you think, how do we get there? How do we get to a point where these multilateral agreements can come together and establish this golden rule?
Yeah, three quick things. One is mindset. It's actually in the past couple of years, we have seen more and more digital agreements being signed. DIPA, Singapore, Australia, those are just examples. And we're seeing more and more of them, especially, I would say, in the past 2-3 years. So I think it's a really good trend. And anything this panel showed that this transformation is just so obvious. So hopefully the policymakers will be more aware of that. Two, true public and private partnership. This is really the time that we need the private sector's expertise to contribute to the public sector's decision making, especially when it comes to a lot of the technology issues, right? From e-commerce to payments to some of the emerging ones, artificial intelligence, DLT, the two sides really need to work together. And this is what also the forum does here in San Francisco at the Center for the 14th Industrial Revolution. And the last thing I'll say, interoperability. So I totally agree with everything Josh just said. I'll just add that, even if there are, differences among the rules, let's find a way to make them interoperable. One quick example, in digital payment, maybe let's push for more open banking guidelines, or, allowing passporting of payment licenses, between countries. So things like that can really help bridging the differences and help grow digital trade. Thank you.
Thank you. I'd like to go to Nelson and ask a question about fintech and blockchain. You are the chief fintech officer and the foremost expert on blockchain in the city. Is blockchain, well, actually blockchain has been talked about a lot as a usable possible solution to insofar as digital trade documentation is concerned. Now, is blockchain possible? Is it possible for you to use blockchain to close some of these gaps and some of these concerns over data privacy? Is the use of blockchain reality or hype?
Yeah, thank you. I think all major technology go through some hype cycle. And if you look at the internet, it was invented in 1969, but you think about how many years or decades before people can transact using the internet. I remember when I joined the HKMA, it was like 16 years ago. That was the time when internet banking was becoming usable, and so you go through the dot-com bubble in the year 2000. I bet this blockchain may be the same. You have to go through this hype cycle. A lot of promise were made, and you take time to materialize some of the benefits of blockchain. But we see very good traction. For example, I work with Mr. Fan on the trade finance tech challenge. We have 3 problem statements, and we are inviting the private sectors to contribute their solutions, blockchain-based solutions, to address some of this digital gap. Obviously, blockchain has its intrinsic, benefits about protecting the privacy. But interoperability between various platforms, we have a lot of trade platforms built on blockchain. I guess these are the issues. It's okay that you have bilateral agreements between 2 jurisdictions. You can start with that. But how this can be scaled globally, that's exactly what we are trying to achieve through this tech challenge.
Can you elaborate a little bit on the interoperability of some of these platforms? For example, in Hong Kong, you already have the E-Trade Connect, which is something a little bit, which operates on a city level. You also have cross-border platforms and in the design, in the work. Can you elaborate a little bit on that?
Sure. I think at first, when everyone build their blockchain solutions, they wanted to be, everyone to join their network. But in reality, we see very fragmented implementation of various different trade-related blockchain solutions. So as you pointed out, the 12 banks here in Hong Kong has formed a bank consortium to build a platform called E-Trade Connect. And that is to facilitate and trade finance between the importer and exporters. Now we are working with the People Bank of China. They also have a platform there in China. So we signed an MOU last year in November to start this proof of concept, how the 2 platforms can be connected to enhance the interoperability. Because one thing Mr. Fan talked about passporting. Another issue about passporting is identity. how do you know the trade counterparty of the companies, the importer exporters of your jurisdiction interact with is a legitimate company, whether this trade is real and whether this trade might have, AML issues. So all these are still, we are at the early stage of information exchange between jurisdictions, and this particular project about connecting our eTrade to the PBOC trade finance platform is actually aiming to achieve that. And of course, that is only a bilateral linkage, as you can imagine. How we can, scale it up. That's why we work with the BIS Innovation Hub to see whether we can contribute the possible success of the connections to a more global stage.
Would you call this a very long-term project?
Oh, it has to be, because if you look at trade and trade finance, it's thousands of years of history, and I think so far no one can claim that they already solve all the trade finance fundamental problems.
Well, maybe history will look back at 2020 as the watershed moment for the beginning of a new digital trade.
Yeah, I mean, at one point, actually, a Chinese old saying said every journey have to start with a single step. So I think we are moving in that direction, leveraging technology and see how we can, move forward and contribute to the common good.
Right. Unfortunately, it's a very painful step for a lot of people. But that's all the time that we have. So thank you very much. Today we have tried to explore a number of points. I think from the very early discussion involving Zilingo, who has had to drop out, we've pretty much established a consensus that this new normal of digital trade, whether it's personal or on a more macroeconomic level, is here to stay. We're past the tipping point. We're down the road of no return. Even if the coronavirus lockdowns were to end tomorrow, there's no going back to status quo ante. So that's the first point. The second point is that we pretty much all agreed on is that there is a digital gap around different economies, different markets in the world, in the way that infrastructure is brought to bear, telecommunications, IT infrastructure, and also the financial rules and regulations that have to be brought to bear to make digital trade available. And more efforts are needed to help close the digital gap, not just between economies and countries, but even within the same economic system. And I think the third point that we have more or less drawn a consensus on is that it is possible for a set of golden rules of globally applicable protocol on digital trade to be available. But it will be a long and arduous journey. It will take a lot of effort. It will require a lot of trust between participants, between different countries, between different economies, between different players, between both the public sector and the private sector. And finally, there are a lot of digital trade protocols in place, and it is an ongoing effort to try and make them interoperable and try and close the gap. So thank you all for this very invigorating discussion. First of all, thank you, Josh. You're in Washington, D.C. Thank you for giving up your evening to be with us.
Thank you, Eugene. It's a pleasure.
Right. And thank you, Mr. Fan. You're in San Francisco. It's late afternoon for you, so we've had a lot of discussions. We haven't had time to go through a lot of other points on our agenda. Maybe this could be food for thought for further collaboration.
Thank you.
And to our two guests here in Hong Kong, Mr. Nelson Chao and Jack Zhang, thank you for giving up your afternoon. Jack, you have just returned to us from Australia. Good luck working from home.
Mm-hmm.
And thank you, Mr. Chao.
Thank you. Thank you,
right.
Eugene.
That's all that we have. Please, for viewers who are joining us from around the world, please continue to subscribe to the WEF newsletter and the South China Morning Post newsletter, where you will be getting more information and details and news and analysis about what's going on. Until we meet again, do stay safe, keep your social distance, wear your mask, stay healthy. Thank you.
Thank you.
Thanks, everyone. Bye-bye.